One.
Hi, Warriors. Let's have a good week. Last week I left you, I was short the dollar index from up here at 104. If you were in our room, you saw I covered before the NFP, before this rally that we had here. And I have no position right now. I'm thinking it's possible we push above the highs, looking for a turnaround Tuesday. If that happens, the pound is now your preferred short. It's given up the most on this pullback. Last week's rally in the dollar from Friday, that's a pretty good give back. Visually, you could see it compared to euro. And actually, I think that there's a possibility that euro holds here and that this was A and this was B, and then we get C. So I'll be paying attention to the euro for possible long scalps tomorrow, along with Aussie, which is, you can see compared to the prior two, have the strongest technical pattern right now, where if I had a chance at 65.50 to buy the Aussie, risking the lows, I would do it. We still had follow through after the strong jobs report that we had on Friday. You have the 10-year yield right now up about 4 bips. I know a lot of people are thinking this could be a failing rally. 360 is the line in the sand, which you got a real nice reaction out of. So it was an easier call here than where we are here, just like the dollars. The dollar going to make a new high before a pullback, or our yield's going to cave. I still keep coming back to the most important chart that I have on the books right now is the weekly TLT chart. And you can see TLT broke down. It tested the breakdown. Here's the TLT. You could see the breakdown test on the 4-hour pretty clear. Look, it tagged the trend line that I had drawn previously. A pretty dramatic come off. I think we're going to open about, 60 lower today. So we'll see what happens there. Also the metals, I've been talking about 1920 gold. We had that rally. I said it'll just be a bounce with the dollar, which is what happened. We rallied up to the 1980 level before coming off, and I just wanted to draw your attention to the important breakout line that I've been talking about. That's going to be coming in. Let me extend it out here around 1920. This could be a very important level for the gold to hold. If not, I think you could be looking at 1880 to 40. And actually, I think before it's all said and done, that we're going to have a chance to buy the gold, maybe even a shade under 1800. Silver acting weak as well. That was just a little bounce. Have a lot of confluence at the 22 area. And just want to cover the yen. Which the yen is starting to fade a little bit here. This is an identical chart to the 10-year yield. So we'll see if this is failing rally or we could get one more push up. If that's the case, a real important area line in the sand is a 138 level. See this moving average, it was a flat top breakout. So, I'm not ready to call the yields over and the move in the yen over until we start closing back under the 138 level, which we held last week. And just one other thing to keep an eye on that just started to shift a little bit. Well, first of all, here's the S&Ps. And here's that line that I drew several weeks ago saying, what's possible, we could get to the 4,300 level, and that's where this is coming in, around 43.5. Start to look for rotation out of tech. S&Ps are up 290, NAS 100 down 28.2. We're at about the 61.8% level here. 14.9 is possible as well, but we're starting to see money coming out of some of the big techs and broadening out into maybe even things like the Russell. When you look at the Russell, it looks like it's just starting to come out of here, and I think that the market's going to try and broaden out. I'm not sure this is an important low, but I think you're going to see, just like the S&P chart, looks stronger than the NASDAQ. Look at the RSI on the daily. Here's the daily. And then you look at the daily on the NASDAQ, perhaps it was a 4-hour. Because the S&P has really led the way Friday. You already have a couple of drives here. This is the NASDAQ, and the S&P took out the 80 level here, the 70 level, so it's trading in the 80s. So S&P is acting better. So pay attention to that. Yields in the yen and the dollar, that's a whole ball of wax. Energy's getting another push because of Saudi cuts. Very possible, most of these cuts have failed to return long-term higher prices, but we could see 80 to 85 and still have a bear market rally and take out these lows. So not as bullish on that. Something you need to keep an eye on now are the grains. We're into growing season. So, here's a look at corn, which reversed very strongly off 560. And, there are certain companies that take advantage of higher agricultural prices. Here's one, CF Industries. And just to take a look at what's happening in wheat and corn, let me find it here for you. Where is it? It's up here. No, it's down here. CZ, BG. There you go. So here's the wheat turning as well. Look at the divergence. And then here's the beans. Similar to the corn. Maybe one more drive, but I think agricultural products are going to be the way to go going into the end of the year. There's a grande El Nino in the Pacific, which could give us problems during the growing season, not necessarily the planting, but things could end up getting pretty dry in the Midwest during critical crop development time. So pay attention to those. Invite you to join us in TradeGATEHub.com. Good hunting the rest of the day, and I'll be back with you tomorrow. Mike will be up in an hour and a half.